Let me also welcome on board Andrew Holland as well and figure out what he's making of the market right now. Andrew, hi, afternoon. Rudra, I'm just going to come to you in a second. How is it that you're mapping the market mood right now? I mean, there is data to prove that mutual funds have actually upped their cash allocations or cash balances, but that doesn't seem to be reflecting anywhere in the markets.
Yeah, no, it's a big week this week, isn't it? With the Jackson Hole meeting and the Federal Reserve Chairman talking there. So I think the market's going to look for two things. One, obviously, that it's a go for an interest rate cut. And then they're going to work out whether it's 25 or 50 basis points. I think it's going to be 25 because the data we've seen recently has been for a robust economy. So, still, I think that they'll edge on the cautious side. But I think he'll have to kind of indicate that, 50 basis points or more might be forthcoming if data, does show to be weakening into the back end of the year. So that will keep the market comfortable. And then, of course, here for our markets, we could probably kind of speculate that maybe the RBI would look at October for some kind of easing here, which would have a positive impact, I think, for the banking sector. And as the commentator said before, it's really the banks which have not performed, which is not getting the index moving higher. So if the bank moves, I think we could see new highs for the markets. Along with interest rate reductions or hints of the interest rate reductions by the Federal Reserve later this week.
Andrew, if one looks at the last 10 days of trading, the volatility, I think, is a big story. It went up from 24 to 55, 60, has come back to 14. Why we have seen such a big change from risk on to risk off and risk off to risk on again?
It's a great question, Nikunj, in terms of, we went from, a soft landing Goldilocks scenario to recession, emergency rate cuts by the Fed, problems with the carry trade. If you would have been away for a week and came back to the market last Monday, you would have said, what's new? What's changed? So I think it's just a little bit of I don't know whether it's because people were just trying to unwind some of their larger holdings because of the yen. It's difficult to say, but I think at that time there was no need to go from soft landing to hard landing so quickly. So I think the market just came back to its senses in saying that, listen, there's nothing wrong with the economy. But the next phase is what is the Fed going to do? Because those worries will linger there. So we have to see at least a 25 basis rate cut in September, if not more. But with the hints that there's going to be more throughout the year, so the market doesn't get worried about this possible kind of recession, which again, if you look over the last few weeks, that the odds by some of the brokers have gone from 40 to 50% down back to 15. So I think some of these are exaggerated by some of the commentators as well.
We are flat in last 1 month. We may be 500-600 points away from an all-time high, but that frankly is not very important in the overall scheme of things. The fact that Dow is now couple of 100 points away from an all-time high, which actually is above 40,000. So Naresh, are we on course to make a new high soon for benchmark indices?
So the way a global structure is, it looks like we are set for a new all-time high slowly and steadily. Till the time we don't break 24,200, the assumption is trend is still on. If you look at what has happened in US markets, full recovery. If you see, say, Asian indices, almost a full recovery. You have Brazil, which has made a new 52-week high. So the case out here is we did not fall as much like the others. So we are taking a little more time, but the structure is positive. And the problem remains on the banking side of it. We are always 30% plus on the indexes, banking and financials. And that as a sector is not pulling up really well. So even if you look at right now, the bank Nifty is at an equivalent of say 23,500 odd levels to the Nifty in terms of performance. So once we get banks performing, we may get a much easier move. if you look at IT names are almost going back to 2021 highs. So even the name sector, which was doing bad for the last 2.5 years, has pulled up again. So it's all about banking names out here, but the structure is positive for a new all-time high as such.
I speak Ola and I just want to put finger on my lips. At 75, 76 when it went public, it barely just scraped through. It was difficult. Last day, some HNI participation, some institutional participation in the issue barely got subscribed. It listed flat. In fact, was lower than the issue price. And half an hour after the listing, we've seen a wave of buying, so much so that the stock from the issue price of 75, 76 has now gone to 146. What did everybody miss on, and what did everybody realize after listing? It's like Jack and the big stocks, right? Overnight, something has changed.
Yeah, Nikunj, I don't know what's changed. I mean, I'm scratching my head in terms of, what. I mean, you could say it was underpriced, but I don't think so. So I'm really not sure what's driven this, the share price so high, to be honest. And I don't know what's changed. What could have changed since the listing? And prior to the listing, that would have this. See, I can only think of two things. I mean, if you remember, we talked about this over a year ago when there's a lot of kind of question marks over the Zomatos and Nikas and everyone else in terms of when were they going to turn profitable, and that was the key, for those stocks. As soon as it started to move, cash flow positive, and then kind of getting profitability as well, that was a move for the share price. So unless there's something I've missed with Ola in terms of profitability, or then that's the only real reason I could think of, Nikunj, at this point. But that wasn't what most brokers were forecasting, initially when it was listed.
Pharma is looking strong, and some of the pharma stocks are actually cutting out. Avendus Pharma, Dr. Reddy, Cipla is having a good session, so to speak. DV's after a little bit of here and there, it's at 4,600 now. Rudramurthy, anything in pharma space which looks interesting?
Among all the pharma stock will be Dr. Reddy, and it is just consolidating now, and risk reward at current market price is really good to buy. So might be at levels closer to the 6,800. I will be a buyer in Dr. Reddy. Even at current market price, you can buy and add on dips. Keep a stop loss of around 6,750 and look at targets of 7,500 to come on Dr. Reddy. And for me, if someone has a longer horizon and you want to add to your portfolio, yes, Biocon is one stock which you can buy at current market price. I will keep a stop loss of around 325 on Biocon, looking at targets of around 420 to come. So positionally, Biocon is a good buy if you have a longer time frame, and Dr. Reddy also looks very strong. These are two stocks looking very strong on chart from the pharma pack.
That's the take coming in on pharma. In the meantime, you've got a Hindalco holding up well. There's Shriram looking good. 1,059 is where this stock is. Tata Steel has not been bad. ONGC, after all those upgrades that trickled in on this stock last week, that continues to hold up another 1.6%. And of course, since we were on the subject of Glenmark Pharma, there is that Motilal Oswal upgrade coming in on Glenmark, wherein they've upgraded the stock to now a buy from the earlier neutral, up the target price also all the way to 1850. So that's another stock which has been holding out very well. Voltas, that's the other big buzzer in trade. There's a buy from both Jefferies as well as Nomura on both these stocks. If we can just bring up those graphics up for you. And they've upped the earlier price targets as well, wherein for Jefferies, the earlier target on Voltas was 1270. Now it's upped all the way to 1770. And for Nomura as well, it's up all the way to 1857 right now. Andrew, how much of the cap goods story you think still has further headroom to go?
So I still think there's a lot more to go for capital goods. I think the ordering by the government is still yet to kind of take place. So I think what moves share prices in this sector is really orders. So once we start to see more orders coming through, I think you'll see the next move in the share prices. The problem is that execution is never quite as good as the order books. So as long as the orders keep flowing, the share prices will do well, but execution will be something which we'll have to continue to watch, because that's what differentiates the good players from the poor execution. So I like the sector, but again, it's one where you have to wait for those orders to come through to get to get the share price moving again. But I think that's going to start coming from September is what I'm hearing. So that could be a catalyst for the sector. But generally overall, the market has the earnings season hasn't been great. There's been pockets of surprises on the positive side, but otherwise no real catalyst for the markets to move higher. And that's why I mentioned before, it's really about interest rates now and the banking sector, moving the markets to new highs.
Interesting stock which has completely turned today. Naresh, this has been an outlier. Otherwise, V-Guard Industries, it's trending lower on strong volumes. Another one which is an outperforming stock has trended lower today is Hindustan Zinc. And then there is Prudent Corporate Advisory, which is a liquid. But V-Guard, Naresh, it's a fairly popular and a liquid stock.
So the stock has been moving up for the last almost 4 or 5 months. The previous all-time highs for the stock were around this 300, 350 mark. And that is where it broke out from. So in the last few sessions also, if you look at it, say in the last 4 or 5 sessions, the stock went from 470 to 570 and now has taken a pause. So it looks like a short-term top is in place. And it could start consolidating. Hindustan Zinc is OFS, so that's seeing that sort of a gap down on that basis. Prudent also has been in a one-way move in the last, say, 6 months. The stock has gone up from 1200, 1300 to 2700. So a pause would be pretty normal here.
Coming in on V-Guard today, just looking at IIFL Finance, because that stock has actually managed to perk up. And then, of course, the mid-cap and the small-cap IT universe and e-clerks, First Source, for instance. In fact, First Source has been having a great run of late. Birlasoft, all of these stocks are doing quite well. See, Rudramurthy, what within these mid-cap IT names would you recommend a buy? Even Tata Elxsi in the last 2 minutes has perked up.
Yeah, see, for me, First Source definitely is a stock which looks strong, and mid-cap IT can continue its outperformance. However, the move has been very swift in last 4 or 5 trading sessions in First Source. So any dips to levels closer to around 310 would be a good entry point. Even at current market price, one can enter into First Source and buy it on dips to 310. And I look at 400 as a target initially on First Source, and it can further move up from there. And when I look at chart patterns of even Tata Elxsi, yes, this stock having made a big move towards that levels of 8,000, 9,000, and then having consolidated now is just giving that signals of breakout. Today, for the first day after a long consolidation, it is just breaking out of a short-term consolidation, which is at around 6,900. So closing above 6,900 is indicating to me that yes, this stock can move up for very short term to levels closer to 7,350. So with a stop loss of 6,900, I will buy Tata Elxsi for target of 7,350. So I buy on First Source as well as Tata Elxsi.
Okay, that's a buy coming in on both First Source as well as Tata Elxsi. In the meantime, it's also important to highlight some of the auto downgrades as well, which are trickling in, right? Both from JP Morgan as well as Citi, which has downgraded the entire sector now to neutral from the earlier overweight stance that they had. And Nikunj, I think we were the first to actually catch in on this trend. Ever since all those discounts were doled out from most of the auto majors.
Yeah, now A, there is availability, and B, now there is perhaps a big change in terms of where the car demand is moving. From being a seller market, which is their car company were demanding the price, they were commanding the delivery, and they were making you wait when it comes to the physical, delivery as well. Now, what we understand is that you actually have virtually for most of the popular models, the waiting period is out. B, You can negotiate on the table, which is that if you are able to get a better home car loan deal, or perhaps the vendor can throw in some sweeteners in form of accessories, or maybe get a upfront cash discount, that is at play. And see, the base effect has now kicked in, as most of the auto companies post-COVID, they've expanded their capacity. There was a time when we saw a huge huge uptick which came in Mahindra and Mahindra largely because of the dominance in SUV market. But guess what? Now everybody wants to be in that SUV market, starting from in Kia to in Maruti to in Mahindra and Mahindra, even Hyundai, Maruti, Tata, everybody wants to be there. Similarly, in the EV market, Tatas have dominated that space, but now again competition seems to be intensifying. So for the auto space per se, I think now you may say that there is going to be perhaps more news which could disappoint rather than more news which could surprise. FMCG on the other hand, completely different kettle of fish. News is getting better, volume growth is coming back, inflation and base effect has kicked in, and we could be at the turn of a cycle where news is going to be more positive rather than negative. Andrew, for autos per se, do you think that bull run is over now? Purely looking at on-ground reality, or the channel checks are indicating that waiting which you had to do when you bought your Mercedes is over now?
Yeah, I mean, in terms of that, Nikunj, I think you're right. In that, the demand is still robust, but obviously suppliers come on, so you get better bargains. But I think that also could lead to better volumes as well. So as long as commodity prices don't rise so quickly, which they haven't been doing, I still think that these, the auto companies will show healthy growth in terms of both top line and margins as well. So a little less worried about that. But what it would say to me is that obviously production has picked up to meet demand. So that's a good news. So I don't know about you, but if someone tells me I have to wait a year and a half for a car, then I probably go and shop somewhere else, right, for something. So if I can get the model I want, with a few extras thrown in, great news. So I'm less worried about that kind of that situation going forward. I think it's good for the volumes of the industry, so I'm less worried.
Sense. Andrew, great to have you on the show. Thank you so much for taking the time out and speaking with us today.
Thank you.
Okay, we'll take a very quick break.
If you like this video, then like, share and subscribe to ET Now.